Since 2009, central banks have been buying gold steadily, and the rising gold price has increased gold's share of global international reserves, reducing the dominance of fiat currencies. By the end of 2023, gold had surpassed the euro in reserves, and the next currency in line to be challenged is the US dollar. Financial analysts focused on foreign exchange reserves often exclude gold and start from the euro's introduction in 1999. These charts show the dollar's share of total reserves gradually falling from a peak of 72% in 2001 to 58% in 2023, with no single currency challenging the dollar. However, if we include gold and extend the timeline back further, a different story emerges. By combining various sources, we can see the distribution of reserve currencies from 1899 to 1935, both fiat and gold, and get a complete picture starting from 1950. The broader view reveals the historical balance between gold and fiat currencies. It shows that gold, not the dollar, has traditionally backed international monetary systems. Gold dominated international reserves even when sterling was considered the world's reserve currency before the dollar. In a longer-term chart focusing on gold and the dollar's dominance appears less absolute. The chart indicates that the dollar's share of total reserves fell to 48% in 2023 due to declining trust in fiat currencies amid asset bubbles, escalating war, and inflation fears. Meanwhile, gold has been gaining ground. Personal calculations, including covert acquisitions by central banks like China's, show that gold's share of total reserves reached 18% in 2023, up from 11% in 2008. Gold has surpassed the euro, which stalled at 16%. Given the persistent issues with fiat currencies, gold could potentially overtake the dollar in the coming decade. Signs are pointing to it now. The International Monetary Fund reported that the currency composition of official foreign exchange reserves, the coffer, point to an ongoing gradual decline in the dollar's share of allocated foreign reserves of central banks and governments. Strikingly, the reduced role of the US dollar over the last 2 decades has not been matched by increases in the shares of other big four currencies like the euro, the yen, and pound. Rather, it has been accompanied by a rise in the share of what we have called non-traditional reserve currencies, including the Australian dollar, Canadian dollar, Chinese renminbi, South Korean won, Singaporean dollar, and the Nordic currencies. IMF also found that financial sanctions, when imposed in the past, induced central banks to shift their reserve portfolios modestly away from currencies which are at risk of being frozen and redeployed in favor of gold, which can be warehoused in the country and thus is free of sanction risks. That work also showed that the demand for gold by central banks responded positively to global economic policy uncertainty and global geopolitical risk. These factors may lie behind the further accumulation of gold by a number of emerging market central banks. This goes back to the point we were making earlier. Even though many countries are steadily acquiring gold and recent geopolitical tensions have doubled the demand, gold's share as a reserve of currency is still historically low, primarily because they have not been included in the measurement and many countries don't report their holdings. Overtaking the dollar won't happen overnight, the same way that the US dollar didn't become this dominant overnight. But if the trends continue, it will happen. Don't miss your chance at bagging some gold for yourself. The world is already doing it. Invest in gold now.